How's it going, guys? Luke and James here from LAGFX, and we're bringing you another Sunday Sessions video. So we're both going to be picking a few pairs to go through and show you the best investment opportunities for this trading week. So as always, with all these pairs that you see, a full top-down analysis will have been done prior. This is how we gain our bias. This is how we know exactly where we want to enter and which side of the market to be on. So make sure that before placing a trade, just like us, you do your top-down and understand what that market's telling you.
So first, we'll go over some of the analysis I've done for the week, and then we'll move over to James's analysis. What I'm also going to do is briefly touch on the analysis I've done for the week previous, and kind of give you a rundown on the results that had.
So at some point in this coming week, you're going to see a video that I made. It's going to be a rundown of a successful trade we had last week, something sent out to the clients, and I wanted to give you guys the analysis behind it, the reasoning behind it, because it was a great trade and a great execution.
So without further ado, let's jump into the video. So before I run through my analysis for the coming week, we're just going to touch on the analysis we did last week and see how we got on and see where we can improve. So if you remember correctly, it was a short for Great British Pound to the US dollar, and we had a tap into supply, and we were basically waiting for a break on this yellow neckline. As you can see, we got a break, so we did enter in on a position, and it was actually a 6-to-1 RR. I'm just going to break it down, go into the 15-minute just to show you where and when we pulled out. So looking here on the 15-minute time frame, you can see we had a lovely break and retest of this neckline, and this is exactly where we entered. So we got a lovely break here, price came up, tapped back into this neckline, and then broke down, and that's exactly where we entered. Now, as soon as our trade got into 2% profit, we moved our stop loss forward. This then made our trade completely risk-free, and as you can see, it took a dip of 30 pips before reversing and closing us out at entry. Now, as soon as the price started to reverse, I did in fact suggest a close at 30 pips, which was 6% returns. And I actually got out at 25 pips, so that was a nice 5% return on this trade. If you did hold, then you wouldn't have made anything, but you wouldn't have lost anything, just because we moved our stop loss to entry, securing that position, making it safe. And then 2 days later, we looked at placing the same position again, and we actually managed to capitalize with our 6-to-1 RR. So we had a lovely return of 12% on this trade. So all we did was look for a break in the neckline, which we got, and then we entered in looking at the 5-minute and 1-minute time frame to get that precise entry. So overall, the trade that we looked at last week and the analysis that we did actually paid off, as we gained a lovely 17% just on this trade. Now, I am actually looking to place another short on Great British Pound to the US dollar and really take advantage of this new bearish move going down. Now, looking at larger time frames, we're just going to look at the 1 hour now. So now looking at the 1 hour time frame, we can actually see how prices dropped down to previous demand, and what we're looking for here is a nice break below this. So just before the market close on Friday, we did actually see some bullish strength pushing the price back up after tapping into this demand zone. Now, this was quickly reversed, and as we can see, it followed by 3 red bearish candles. So hopefully, as of Monday, we can get this break and we can really take advantage. So if all goes well, I will be looking to capitalize on this pair again, placing that short position and probably riding it down to another area of demand, which would probably be somewhere around here. So really looking to ride that price down from this point to this point. So if we just get the ruler out, we can see how many pips that is. We can really take advantage of a 90 pip swing. I'll be keeping my stop loss very tight, just above this demand zone here, and then having my TP just tapping into this demand zone here. Now, if you want more in-depth analysis on this pair, then head over to our Learning Lounge. It's completely free, it's on Telegram, and check out the written analysis done over on our group chat there. So moving on to XAU USD, James is also looking at a bearish position on this trade, and he's going to run through his analysis as well later on. But just to give you a brief look on what I'm seeing, and what I'm thinking is, I'm basically just wanting a break below this and just to ride it down to this demand zone here. It's as simple as that. We've had the tap into supply. We've then had the push down. We're having the last push up now just to clear liquidity for the last time to the upside, manipulate those sellers, manipulate the buyers, and then I'm predicting a nice bleed out or a nice push down into this demand zone here. So hold tight for XAU USD on this coming week, as I do feel like it's going to produce nice bearish structure. Now, for the final pair that I'm looking at for this week commencing, it is the Euro JPY. And just looking at the 1 day time frame, we can see that we've had lovely bullish structure here. We've then had a break in structure coming to the downside. We've then had an area of consolidation or reaccumulation. Price is then pushed up. We've tapped into this supply zone. We've then had a breakdown. The price is then pushed up towards this supply zone again. Now, after that last push up, I do believe that price is going to come back down and tap into previous demand. So looking at this pair on the 4 hour time frame, we can see that we've had a nice tap in to the supply zone. We've then had the push down, the last tap, and then we've had nice bearish structure being delivered. Now, as you can see here, we've had some bullish strength. So this really confuses those sellers in thinking that maybe there's going to be a change in trend, maybe the bulls are now in control, but they soon get their confirmation with this candle here. So if we just highlight this candlestick right here is very important for those who really look at candlestick formations as a way of confirmation. So for me, this is something called a shooting star. Now, a shooting star is a candlestick that tells us retail traders that price is actually reversing and going to move to the downside. And as we can see from this shooting star, we've then had nice bearish pressure and the start of a push down. So hopefully this week commencing, we can also capitalize on this pair as well, and it'll also be a bearish position. Now, in order for me to enter into this trade, what I will need is proof and confluence that it is bearish and price is still moving down. So first and foremost, I will look for a break below this point. Once we have this and we then have a continuation in bearish pressure and bearish structure starts to build, I will look at lower time frames for my entry point, and then I'll also look at points of interest where I see areas of demand and where I feel like my TP could be placed at a position that's safe. So I know I said this last week, I know my analysis is quite brief. I like to keep it short and simple just because I don't want to blabber on about my analysis and go too in depth and confuse people. So if you are interested and you are interested in learning more, or you're interested in the work that both me and James do, join our Telegram group chat, and there you will have access to all the analysis we do and the potential entries that we put out for our clients. Now what I'm going to do is hand you over to James, and he's going to run through the pairs that he's looking at for the week commencing and give you a more in-depth look through his strategy.
Thank you, Luke. Hopefully you guys have enjoyed the pairs that Luke's ran through, seen some great investment opportunities from him. Now we'll dive into what I'm looking at. So starting on with gold, or XAU to USD, we can see here we've clearly been downtrending longer term. Everybody who's been watching this market knows this. Now, I have two major supply zones that I'd be looking to sell from longer term. Of course, this being the first one, I'd definitely like this one to be the one that holds. If not, I'm expecting, okay, price will clear this liquidity and then maybe react to this upper supply zone here. Moving on, the reason why I'm looking for sales is this large liquidity point. It's definitely an area of concentrated stop losses in the market. We can see plenty of equal lows. We want price to push through this, clear that liquidity before any real move higher. Now move into a lot more shorter term. So for the whole month, from the start of October to the end, we've seen this bullish move, this bullish trend upwards. We've actively been breaking these highs, setting them in place, breaking them, and actually moving those lows a bit higher, protecting the ones in place. Now recently, instead of actually breaking the highs, we began to break the lows, evident by this break of structure here, the BOS, and now we have a new protected high in the market. Prices failed to surpass this level, tells me more supplies entered this market. We could be due for either a wider scheme retracement or the start of a heavy bearish run. Now the one zone I'm going to be looking to sell from is around this region, so the 1792 to 1798 region. We have a nice buy before sell candle, clear institutional control. I believe there's unmitigated positions in here. I want to see price tap back in, find that reversal, looking on lower time frames for entry confirmation, maybe look for a distribution. If seen, get on your sell positions and hopefully ride that down to around the 1734 mark. Now, moving on to the US dollar to Japanese yen. This is something that we actually got a trade on last week that we held throughout the entire week. There's a video coming out on this later in the week. I'm going to run through exactly why I took the trade and give you a proper top down as to why I was looking for sales in this area. For now, we'll continue with a bias that sales are appropriate given the protected highs and given the breaking of the lows. Now, I've identified a lovely supply zone in here. I'm expecting price to hold here. We see it's just tapped in. I'm hoping to see a nice distribution form here on those lower time frames. We'll hopefully be able to get in on a nice sell position from this region. So looking at that 113.9 to 114.2, anywhere within this region is valid. The reason I like this is just because it's come back to retrace, mitigate this position, clear the liquidity we've set in the previous move down, and we're showing a bit of hesitance to move onwards. Supply has clearly been entered into the market, so looking for sales here is appropriate. I'd want to ride that down to about the 112 mark. So the reason why I'm looking to have a take profit around this region is just because of this clear sell before buy, a lovely area that shows that the smart money operators were present here. There's going to be unmitigated positions, so I'd expect if any demand's going to enter on this move down, this is going to be that key area. Now remembering risk management, if I was to get a sell here, I would be looking to partial at this low, assuming that likely from this one, how I took a partial here in my trade, and price came just past retraced. We have to expect that that could happen again, so I definitely recommend having some partial closes around that 113.3 to 113.4 region. Now moving on to the UK100 or the FTSE, whatever you know it as. This is a pair I've been watching for some time now. I noticed a lovely reaccumulation in the market and two unmitigated positions that were quite clear to me. I've been waiting for price to trade back down. You can see within this region, I was hoping for sales from here, looking at these supply zones to potentially sell from. We did get a nice sell from this first supply zone where we took a partial, managed to get a slight profit before it came back up and hit our entry. But for now, I'm expecting we've had a clear break of structure and I'm starting to see some signs of a distribution form. We've got all the clear events, so our buying climax, automatic rally, our secondary tests, a good sign of weakness here, moving into that up thrust, so that extreme high in the market, and since we have been trading down, I'm expecting to look for some short positions, hopefully get in somewhere around this region. I'll dive into lower time frames and show you exactly where it would be ideal, but for now just know we're looking to ride a sell down to either the 7087 mark or the 6992. Of course I'd look to partial here first before anything else, but I think with this likely distribution forming, a sell here is definitely appropriate. So I've marked out this distribution here. I've also labelled a supply zone, the most relevant one that I would look to sell from. However, we have had a few taps already, potentially create some equal highs. I'd just be cautious when looking to enter on this pair. I'd maybe allow it to play out slightly before trying to enter, just see what price is wanting to do, let its next wave down come, and then we'll look again for a supply zone to enter on. Just see whatever follows your strategy best, but longer term I'm definitely wanting a sell on this market. Okay, so the last market I'm moving on to is the US oil, also known as WTI crude oil. Now we can see that price has been putting in bullish structure for some time now, and of course what happened in the world with all the oil madness that went on, we're not even going to get into that, but that caused a heavy bull run recently. Now I'm seeing that supply has entered. There's definitely a hesitancy for price to continue higher. Now I'm thinking we could be due that retracement now, and these are the three key areas that I'm looking for either a buy from or at least a partial our sell positions. So firstly, looking at that 77 to 75 mark, get your alert set there, After that, the 71 all the way down to 69, another place to have your alert set, and then finally one at this protected low. However, I do not believe price will retrace this far down given the clear demand that is in the market right now. So quickly zooming in again, like the FTSE, we have what appears to be a distribution here. We've had our buying climax, automatic rally, secondary test, a nice sign of weakness, another secondary test, again, price showing that it wants to move lower. We've just had that manipulation of the highs, that break and clear of liquidity. We've set that extreme high in the market. We began breaking down. I'm expecting price to continue doing this. Now, right now, if we look on the hour, even though this looks really, really horrible, I would draw a supply zone somewhere in this region, arguing that price has just tapped into this. So I think looking for sells from this area is definitely wise. We're seeing again some rejection from this zone, looking lower. We could see and try to find a distribution here. If so, look for your sells and ride them down to those zones that I stated.
So that brings us to the end of the video. I hope you like the analysis we've done for you today, and I hope you can take some of the things that we've said on board as well.
Yeah, so as Luke said, plenty of investment opportunities in this video. Make sure to look at your own charts, see if you're seeing the same thing. Hopefully you can profit from these moves that we've predicted. If so, let us know. If you've enjoyed this analysis, leave us a like in the comments whether you agree, disagree with what we've gone over. Make sure you hit that subscription, turn the notifications on. You know, we have weekly scheduled videos and we don't want you to miss out.